Speaking of these bank cash concerns, the wealthy have been shifting their assets around. Let's get to Robert Frank. He's here with that story, and they're moving up to some interesting places, Robert.
Yeah, Kelly, as David mentioned, a lot of wealthy clients at First Republic, and that's why we're seeing a lot of these big investors and wealth investors making two big moves after this banking crisis that we're in. They're shifting money out of the smaller banks and out of cash balances. Advisors saying big investors were already moving their cash from checking and savings account into higher yielding treasury and money markets. That's only accelerated over the past week since those investments are not on the bank balance sheets and therefore less at risk. Now, they're also moving away from banks and into custodial accounts like Fidelity, Pershing, and Schwab. Schwab saying clients are moving an average of $2 billion a day in net new assets into that firm this month. Custody accounts avoid that bank risk and allow a lot more flexibility for stock ownership and to change advisors.
This was a real wake-up call to ultra high net worth individuals who have cash around that, why have money at a bank, in a bank deposit if it's not necessary, if you can simply own a money market fund in a brokerage account?
And wealthy clients also pushing back on the widespread practice by banks of requiring deposits or primary banking relationships in exchange for loans or mortgages. You can read a lot more about where family offices are putting their money and investing in our latest family office investor interview. That is on CNBC Pro today.
Can you imagine that if you were in 2008, you said in the next banking crisis, people are going to be moving their money into money market funds.
Into money market funds, yeah. which was a big no-no during the financial crisis.
Absolutely.
A lot of people moved them into the banks.
It tells you also about the lack of alternatives. There's really not a lot of great, safe places to put this kind of capital, and I don't know if we're just going to keep ping-ponging this around.
Well, and where yields are, it just makes sense not to have any money unless what you need in cash right now. You have to have in something that's earning 4 or 5%.
Exactly. Robert, thank you. Robert Frank.